Here's the uncomfortable truth. Most people will never be rich because they're waiting for the perfect moment to invest. They're scrolling YouTube, reading articles, comparing apps, all while their money sits in a savings account, earning 0.01% interest. Meanwhile, someone who started 5 years ago just made more money doing absolutely nothing than you made working 40 hours last week. That person discovered index funds and passive investing, and I'm about to show you exactly how it works. Let's cut through the jargon. An index fund is basically a bucket that holds hundreds or even thousands of company stocks all at once. Instead of trying to pick the next Apple or Tesla, which even professional investors fail at 80% of the time, you just buy the whole bucket. The most popular bucket is called the S&P 500, which holds the 500 largest companies in America. When those companies do well, your money grows. When they dip, you ride it out. That's it. That's the strategy that built generational wealth. Here's the math that should make you uncomfortable if you haven't started yet. If you invest $5,000 into an index fund today at age 24, with an average 10% annual return, which is historically accurate for the S&P 500, by age 60 you'll have nearly $5,000. If you wait until you're 30, you're looking at $40,000. That's a difference of $40,000 for waiting just 10 years. And if you add 2 and every single month, you're hitting $1 million by retirement. This isn't theoretical. This is compound interest. And Einstein called it the eighth wonder of the world. Now, how do you actually start? Step 1. Open an account with any major brokerage. Vanguard, Fidelity, Charles Schwab. They're all essentially the same because they're offering the same index funds. Step 2. Fund your account. You can start with $100 if that's what you have. Step 3. Find the S&P 500 index fund or a total market index fund. Search for ticker symbols like VOO, SPY, or VTI. Step 4. Buy it. That's genuinely all there is. You're not timing the market. You're not watching daily. You're just buying and forgetting. The magic word here is passive. It's not actively trading. You're not checking your portfolio every hour like a gambling addict. You buy these index funds and let compound interest do the heavy lifting for 2, 3, 4 decades. Your only job is to not panic sell when the market drops 20% in a year. And trust me, it will. People who sold everything in 2008 lost money. People who held and kept investing tripled their wealth by 2020. Boring consistency beats exciting panic every single time. Here's the one mistake that costs people $200,000. They think they need to understand everything before starting. You don't. You don't need to know what a P/E ratio is or how to read a balance sheet. You need one piece of knowledge. Index funds historically return about 10% annually over long periods. Start small if that makes you comfortable, but start today. Not next month when you've saved more. Not next year when the market looks better. Today. Because the biggest predictor of investment success isn't intelligence or market knowledge. It's time. And time is the one resource you're literally running out of right now. So here's your action plan. This week, open a brokerage account. Next week, deposit your first $100 or $1,000 or whatever you can. Then, buy one index fund and set a monthly automatic investment if possible. Then forget about it. Check it once a year maximum. That's the entire passive investing strategy. It's not glamorous. It won't make a good story at parties. But it works, and it works for literally everyone willing to start. This video is educational content about personal finance and investment strategy for beginners. It's not financial advice. Please consult a qualified financial advisor before making investment decisions based on your personal situation. If this made sense to you, hit like and subscribe, because we're dropping more honest finance content that actually moves your life forward. The difference between financial freedom and financial stress often comes down to decisions you make today. Make the right one.